Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Well, as we have suggested, that the financial world probably will change at the end of the current week, at least in the medium-term period, and that really has happened. We haven't got even the non-farm payrolls release yet, but the drastic action already has happened across the board on all major currencies, and you probably also see this. Also, you could see that the stock market was impacted by the recent data that has been released on the United States employment market, job market, and although yesterday it was in general not very significant numbers on the initial claims, but what is more interesting and why this was really a huge impact on the markets, because recent data shows the significant increasing in the wages. That's why this report was important, and the increasing in wages is the very significant moment that impacts on the interest rate level and on inflation inside the country. That's why the significant jump in wages recent data, that was really significant impact on the brains of the analysts and on the investors. And today everybody will expect a non-farm payroll release, and after that in August we will get the testimony of the Federal Reserve and the Jackson Hole. That really could make a significant impact on the economy. That's why you see right now the significant action in all US dollar related assets, including the stock market. As you can see, there are really significant jump in the VIX index for the 12%. That's really what was really significant jump. This was really huge plunge on the S&P, and though within the current year market is really a significant move down. That for us, this opens the significant chances for trading. And since today we still will be watching for non-farm payrolls release, we again will mostly deal with the tactical issues. So the setup that we have discussed on the Great British Pound and daily is still valid, and we still do not get any bullish patterns yet. So for us, it is developing. Market right now at the 618 support. Okay, so we do not have any patterns right here, and we will be watching for this setup, because sooner or later market will form something here that will give us nice chance for trading. It's just a brief update of different setups that we have just discussed on the current week. On the euro currency, we also do not see nothing interesting. So yesterday market has reached this support area and still stands there. You can see this butterfly. Market still stands and calling around 133.80. That's why, guys, today I call you to watch over Australian dollar. Australian dollar also has nice setup in the short-term perspective. This setup mostly is based on the nice combination of different patterns. First is the ABC top D pattern that has been completed slightly higher. And although it doesn't worth any significant relation from us, because it's really such plunge on the daily time frame charts that becomes the foundation for the AB and CD legs, it's really difficult to rely on this pattern and treat it as the support after the significant plunge down. But still, what we have, at least we could watch for this today, because I do not want to currently discuss any strategical moments and long-term trades, because we still stand at the eve of the non-farm payrolls release. But taking on this fast tactical issue, that's really what we would like to do right now. So this ABCD down, market has hit the oversold on the daily time frame chart of the Australian dollar. And that's also deep fib support, 768 fib support. This market has passed through the 618. That was shy retracement. So in general, that's now the 768 fib support at oversold. On the intraday charts, on the 4-hour time frame chart, we have this setup. That's I would like to watch for. Nice thrust down, close above the 3x3, close below, and probably market will create the new low when we will get the close above, and we can't exclude it because today we will get the non-farm payrolls release, right? If we will get the close above, then we could get the double repo buy pattern that will be confirmed, and that could trigger some retracement, and that's also possible, especially after such tough week when the investors was really spring and an expectation of the major data from the markets, Fed meeting and so on, and some retracement profit taking could follow. That's absolutely normal. Well, maybe on the hourly chart this could take some kind of the butterfly or something, some other pattern could be formed here. I don't know yet what it will be and whether it will be at all. Maybe market will just continue plunge down, that's all. But currently we have the potential setup. That's why at the eve of the non-farm payrolls release, that's really nice potential pattern. And what's more significant is that this is short term. It's a really short term pattern, and it could be traded without any strategical issues and without any looking at the really big picture. So we know that market support and daily oversold, and we know that market could form the double repo, as the minor retracement out from the oversold is just the attempt to exit from the uncomfortable oversold condition. So market could form some retracement to the 50% level, for example, on the forward time frame chart based on this double repo buy. Why not? But at the same time, that will be not really a small move, approximately 60-70 pips. Well, it's really not bad. Well, speaking about non-farm payrolls release, the Reuters poll suggests to see the consensus stand about the 233,000 new jobs created. That's approximately will be the normal numbers. The numbers below the 200,000 will be probably treated as not really positive. Well, the jump above the 250,000 probably will be the positive surprise. But I think that market really could show that some dollar supported reaction even if numbers will be in a row with the expectations. Because if market will show the release approximately 230,000, that will mean that the non-farm payrolls non-farm payroll data shows the stable numbers above 200,000 within the recent 6 months. So that will be a really positive sign, and that also could lead to the positive reaction. Personally, guys, I do not trade that data releases, but I know that some of you trades, and that's why I'm speaking about the data that today Reuters have posted on the private data stream terminal. So that's the data that Reuters shows. So let's see what will happen. Well, currently, guys, as I said, probably if you would like to trade some tactical issues, maybe some tactical small patterns before non-farm payrolls release. And on the next week, in the weekly research, we probably will have enough information to start to think and develop some strategical analysis. And we probably will take the broader view on some currencies. Maybe this will be euro currency, but also it could be the Canadian dollar, because the Canadian dollar right now is very interesting on the long-term setup. Also the Japanese yen is really interesting.